And welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Today, we're going to be talking a little bit of crypto, a little bit about real estate, and mixing of the two. And there's a lot going on, as you know, with all the different things and the elements of the economy. So let's start digging right into it with talking about how the real estate market is looking and how crypto is looking to solve a lot of the mortgage issues that are out there with traditional lenders. So pardon this weird null space below me, but just the only way I could share this image was, this is from my story on Instagram. By the way, if you're not following me on Instagram, and it's really hard to find me, it's called LitecoinLeader. I really recommend you go over there and check me out. But I post things up there. Sometimes I post them as posts, and sometimes I post them as stories. And stories disappear in 24 hours, but posts last a longer time. So longer stuff I want to keep, I try to make a post and then post it to my story. It's complicated, I know. If you're not an Instagram person, it's tough to learn, but it sounds complicated, but it's not as bad as it is. But let's go over to this story, which is over there that I'm pointing in the right direction. So this story is about the home sales in March. And this is it's a Twitter post that I grabbed from Track Inflation, which is Inflation Tracker. Again, Liz Dexia. Home sales in March were 763,000 versus 835,000 in February. That's down over 12.5%. That means for every 8 houses that were sold in every 8 houses that were sold in February, only 7 were sold in March. So 1 out of 8 houses less sales. So last month, a lot of threes, 33,333 properties across the U.S. faced foreclosure, a 181% jump from last year, March. So that's year over year, almost 3 times as many. The first quarter, which is January through March, saw 78,000 plus properties with a foreclosure filing. All this screams that real estate bubble. It means that we're looking at a real estate market that's starting to cool off. We know that mortgage rates are creeping up. We know that it's getting harder for people to afford things with interest rates going up. The prices must come down, because if you go from a mortgage that's say 4% to 6%, that's like a 50%, 30 to 50% boost of the cost of your payments. It's tough. I think 6%, you see, 6% mortgage is $600 per 100,000. A 4% mortgage, or excuse me, a 3% mortgage is $400. So a 3% mortgage, which used to be commonplace last year, that would now at 6%, now you're looking at a 50% increase of your payments. So in order for an average person to be able to afford a house in the same payment level, let's say that they could afford $2,000 a month, just picking a number. Well, the price that they can afford for that house has now gone down by 50%. So if they could afford a $300,000 house, now they can only afford a $200,000 house. That's going to create price pressure on the real estate market, which should be pulling prices down. Now, of course, there are these companies, the larger companies, the conglomerates that keep buying up real estate, kind of like the you will own nothing and like it agenda. We're not going to get into that, but that's happening as well. So that these cash buyers that are out there that are just grabbing things, they are still going to exist. But as more houses get onto the marketplace, either through foreclosures or for price reductions or not selling, the real estate market is going to cool off, and it should make it more affordable to the average home buyer, in theory. But you're not going to feel any different, because your payment's not going to be the different. The only difference is going to be the price that you can afford. So again, you're still paying that $2,000 a month. You're just buying a $200,000 house instead of a $3,000 house. I know those payments don't line up. I'm sorry. I'm just going off. Let's just say $300,000 versus a $450,000 house. That's more aligned with those payments. But the general concept is still there. Real estate is cooling off. Prices have to come down to be able to be in the price range and payment range that people can now afford. So that's story number 1. I'm going to talk about how this applies to the crypto market in story number 2 next after this. Hello again, everyone. Imagine finding me here. I'm advertising on my own channel. Yes, that sounds very weird, but the point of me advertising it, and I'm worth every dollar I paid for it to be here, okay? I paid myself very well to get this sponsorship. But the point of this advertisement is for you guys. And all kidding aside, I'm here for you. The whole point of LitecoinLeader, the website, the YouTube, my persona, everything is here to help you. I'm here to be the guy I wish I had when I started. So the order for me to do that and for helping as many people as I can this year, that's one of my goals, to help 10,000 people however I can, is to reach out to you. And I know I can't do it all individually. That would be 10,000 hours, which don't exist in 1 year. But what I can do is I can offer you, if you really need to reach out and talk to me, I'm going to put my calendar link right down here at the bottom, and you can use this link right across here. I don't know where I'm going to be. I'm just waving my finger across my face. But there's going to be something I'm going to be adding to this video. That'll be a link to my calendar. It's also on my LitecoinLeader.com website. If you have questions about crypto, real estate, finance, Nexo, whatever, reach out to me. Book some time with me. And if you can't find a good time slot, of course, you can always reach out to me, Jeff@LitecoinLeader.com, LitecoinLeader on Instagram or Telegram, my phone number, my business number, which is a tough one for me to get back to, but I try to do as fast as I can. Shoot me a text at that is probably best, but that number's at the top of my website. Find some time with me. And I fortunately I'm very lucky to have a little bit of time between now and July 1st, July 4th, that weekend. So if you need me and you want to just have a little chat, book some time with me and let's talk about it and see how I can help you. And again, not financial advice, it's just for educational purposes only. But if you have individualized questions or just want to talk on an individualized basis of learning how to do a liquidity pool, how to do Nexo, how to do whatever, book some time with me and let's chat. And if it's a quick question, I have to say I have to put a price on my time because I only get so many hours each day. So hopefully you understand. I just want to put that out there. If you guys need some help, I'm available, but it's limited. So with all that said, let's get back to the video. All right, so this is the other half of the story today. Now that we've had a word from our sponsor. It's so strange to do that, I know. But I'm here for you guys. Just want to let you know that. And again, everything's in the description if you need it. Plus, there's a whole bunch of things that are of value in the description. If you never checked out my description box, there's a whole lot of links from IRAs to joining CryptoConfidential, and I think we have an AMA tomorrow night. There's a lot of good stuff in there, and I've got even more stuff over at LitecoinLeader.com, getting a BitPay card, getting a Litecoin card, getting involved in Nexo. All these cool stuff is there. It's there for your use. I don't want to constantly bombard you with ads or pitches or whatever. If you need it, find it on my website. The website's for free. It's there for you. Look in the description box. If there's something you're looking for, you can't find it, let me know. So, story number 2. This is from Cointelegraph. It was just last week. Uncollateralized DeFi mortgage taken out on an Austin condo via teller. So what this is talking about, let's go over some of the things I highlighted. And I'm going to skip the red section for right now. I'll come back to that. Let's go to the orange. The USDC.com Homes crypto mortgages platform, easy to say, issued its first crypto loan to an Austin resident who bought a $680,000 condo. That's a pricey condo. That's a very expensive condo. But a $680,000 condo with a $500,000 loan issued in USDC stablecoin on the Polygon network. That's Matic if you're not familiar, but Polygon is a great network, and they have a layer 1 and a layer 2. The yellow part, this new platform combines practices from traditional lending markets, such as leveraging a borrower's credit score to determining eligibility of new decentralized finance, or DeFi, innovations such as cryptocurrency staking to help pay off the balance. We'll get to the details of that, but let's go back to the red and highlight something that was mentioned just recently here in the yellow section. This loan allows crypto holders to take out traditional uncollateralized mortgages based on their credit scores. So you're not leaving the traditional system just yet. You're not entirely in crypto here with this product. They're still looking at your credit score, which it's a mystery. Okay, there's a lot of factors to it. There's a lot of things that go into a credit score. It's basically the better you play within that system, the better off your score is, and the more credit worthy they deem you. But it's not hard to fall out of that system or look bad in the eyes of that system, especially if you're a crypto person. So won't go into that, but I'm just highlighting that if you have a mediocre or less credit score, this may not be the product for you. But what I am highlighting is that these products are starting to be built and are coming to the forefront. So let's go over this product a little bit more. 2 more sections I highlighted. The loans for the platform are issued in USD, but borrowers can make payments in either ETH or Bitcoin or USDC. It's been built using the Teller lending protocol and backed by the TrueFi project that issues uncollateralized crypto loans. USDC.homes can issue 30-year mortgages as large as $5 million at a 5.5% interest rate, which requires a 20% down payment. Each borrower's down payment is staked, not sold, and accrues interest over time that can be used to help homeowners pay off their loans. And then there's also something about a Bacon protocol, has been issuing NFT mortgages since last November in the 3.1% range, less than the 5.5% traditional rate. So I'll link this story in the description. It shouldn't be hard to find. But the point I wanted to make, well, let's get out of share screen mode and wrap this up. And here I am again to close out the video for today. So again, I know it's a lot to absorb, and I know it's a crypto channel. So this is crypto merging with real estate. So it's really in my wheelhouse because I used to do real estate. Now I do crypto. And cryptocurrencies are coming to take over traditional finance. That's what DeFi is all about. And as we get closer and closer to people being able to do mortgage-backed loans or crypto-backed loans and just buying real estate with their crypto, you certainly can do it now. If you have enough Bitcoin and Ethereum, you can go to Nexo and borrow against that crypto and buy whatever you want. If you've got enough, if you say if you have $1 million of crypto, you can borrow half of that for the Nexo platform and buy a $500,000 home. You could do that, and then your mortgage would be on the Nexo platform. However, that's you're still not. I mean, that does get you out of the traditional system. You don't have to go to a bank or get approval or anything like that. But there's still hoops to jump through and hurdles to clear. But it's interesting to see an article that, I mean, even Cointelegraph is talking about how there are products coming out there to work with traditional markets like real estate with newer products like crypto. So they understand that there's a gap here and that needs to be filled, and someone's going to fill it, and someone's going to be there to fill it in. So you've got companies like Proppy, which I think it tickers PRO. Those are available on Coinbase now, which was a big move. They've been around for years, and they sell real estate for crypto. And now you have mortgages that are available in crypto. So all these things are colliding, combining, and moving towards the new platform. We have two competing worlds. We have the traditional finance system, right? I'll say right here, and we have the crypto system over here. And eventually they're going to merge. But for now, we have two systems that are competing against each other, and we have to figure out the ways to bridge those gaps. So this is one of the ways those get bridged. What are your thoughts? Are you looking is this something you'd be interested in longer term when your crypto holdings, buying real world assets that can appreciate? And maybe it's not the right time to buy real estate. Yes, we can talk about that too. I've mentioned that several times. As that was the first thing I mentioned on Instagram, and that post is the market seems to be cooling off, so the prices could be coming down. So maybe not the best time to go out and look for a finance product, but it never hurts to explore and see what's available. So know what these resources are out there. Just like I always am looking for new resources, because I never know when whoever's going to pick up the phone or book an appointment with me and we talk about something. I'm like, hey, I got an idea for you how to deal that, and how to manage that, how to structure that, which would make a lot of sense. So I always try, whenever I have an appointment with someone, I always try to make sure that they get more value out of the call than what they pay for. Otherwise, that they're not going to call back. That's the whole point. I want to give them more value than they expected. So, lots said today. I would love to hear your thoughts in the comments. But until then, until I get a chance to read them and read about them later, I hope you enjoyed this video, and as well as other videos that I put out there, including the Nexo series, which I'll put that up here in the corner. That's probably one of my best series. It's almost an hour long, teaches you how to use Nexo properly, what it's for, what it's not for, and help you to wrap your mind around a mortgage product compared to a Nexo product where you're borrowing against your crypto, which relates very much to what I talked about today. Okay, I'm going to stop talking because I can talk forever, so I'm going to chill out, relax, pause, close the drawer in the bureau, say follow the leader one more time, and I will talk to you soon. Take care.